New at 10, protests at the State House in Michigan after lawmakers pass a right-to-work bill. That's right, a major move against unions in what was until a month ago a very pro-union state. What's going on in Michigan? We are on that one. But the big story today, 350,000 people left the workforce in November. They just gave up. That is what contributed heavily to the unemployment rate dropping to 7.7%. And what could be considered a sign of things to come, IBM dramatically changes the way it matches employee contributions to 401k pension plans. Now they'll pay a lump sum on December 31st. So if you quit before December 15th, you get no match for that calendar year. It saves IBM millions. Check the big board. Where are we this Jobs Friday? A half hour into the session, we're up just 32 points, but the Dow is back above 13,100. It's Jobs Friday. Here is an appropriate company. Fox News contributor Monica Crowley is with us. And please cue the organ. Lifeline Chief Executive Officer Scott Page is here. He bets on other people's deaths. Okay, got it. Nicole Petalides, she is on the floor of the New York Stock Exchange. Let's get straight to the big story of the day. The November jobs report. 350,000 people, this is the key number, they left the workforce last month. The labor participation rate also fell. The unemployment rate came down, but those two, that number, 350,000, that, Monica, that's not a good sign.
No,
it's not.
I mean, that's an astonishing number, but we've seen numbers along these lines now for months and months and months. The unemployment picture in this country, Stuart, is not getting any better. It's sort of stabilized, it's hit a plateau, but at a very dismal position. That 350,000 people who left the workforce, this is not America. This is not what we should be experiencing here. We tend to look at the unemployment rate and we look at these unemployment numbers, but remember that is closely tied to the slow GDP growth rate.
Right.
I mean, we're at about 2%, maybe 2.2% GDP growth. That is nothing compared to what we saw during the Reagan recovery of 6, 7, 8, 9% GDP growth.
I got Austin Goolsbee to admit that this morning on this program.
I saw.
Austin Goolsbee basically helped write the president's economic policy. He's got a vested interest in saying this recovery is doing okay. I'm going to throw one more number at you. If we had the same labor force participation rate today as we had in December of 2007, the unemployment rate would be 11%.
Yes, and in fact, when the president came in January of 2009, if we had the same labor participation rate as we had then, it would be 10.7%.
So the whole reason for the decline in the unemployment rate is people dropping out of the workforce, right?
Yes.
Do you have anything to add to this, Chief Executive Officer Scott Page?
I do. I think we need to look at why these people are dropping out and how much have just given up versus going into retirement. But I'm going to make a prediction on December 21st. We're going to see an increase in jobs. It's going to be a benefit of what happened with
rebound from Sandy.
Rebound from Sandy and holidays. So I do think that the economy is getting stronger, and it's going to get stronger. And my prediction is that jobs are going to increase.
You think the economy is getting stronger?
Yes.
You do?
Yes.
What's the evidence for that?
It's what we're talking about. It hit a plateau and it stopped. It can only go up. I do not believe it will go down.
Yeah, well, we've got 2%, 2.5%
growth
rate. What do you see in the future? 3.5% or 4%? Surely not.
I say a small increase is going to happen in the future, but I do believe that jobs are going to be
Based on what, though, Scott? I mean, you have Obamacare, you have a potential recession coming down.
We've got taxes going up on January the 1st.
I think we have taxes going up. Well, that's
you think that's going to create economic growth?
I think it's going to force change, and until what this country needs is some serious change.
Now, wait a minute. You're talking economic growth. You're trying to tell me that we've got growth now of 2.5%. That's it. That's what we've got. You're saying that we're going to go to 3.5%, 4% with tax increases?
But I do believe there's going to be an increase. And I think on the 21st, we're going to see an increase. Whether it has to do with seasonal growth or Hurricane Sandy, we're going to see an increase, which is improvement.
Stuart and I are very
Cue the harp. Yeah, every time he speaks, I want the harp, okay? I'm going to move on. Thank you. I want to move on to the IBM story. It is changing its 401k organization, how it plans it. Its match will now be paid to employees, a one-time payment, December 31st. That means if you leave the company before December 15th, that's the date there, you leave before December 15th, you don't get any of the company match that you've actually earned for that year. Big deal for IBM. They save a lot, but bad news for employees. You are a chief executive officer. What do you say about this?
I say brilliant.
For IBM?
For IBM and for companies. I think that companies are forced now to pay more for benefits and provide employee benefits. I think it should help keep employee retention to look at that benefit Again, it's a benefit. It's not an entitlement. They should stay the entire year, and if they stay the entire year, part of what the company will give them is their match.
Ah, so it's company retention.
Company retention.
That'll help with that.
Yes.
Because you ain't going to leave on December 14th.
If you haven't,
I'll stay, baby.
Exactly.
I'll stay.
It's company retention.
All right. That's a good point, Scott Page. You redeemed yourself somewhat. Big protest by union members at the Michigan State Capitol building yesterday. Republicans passed a measure which could make Michigan a right-to-work state. Unions furious, as you might expect. But last month, the people spoke. They voted against putting union rights in the state constitution. Monica, Michigan, a right-to-work state? Are you kidding me?
It's pretty astonishing. And this, of course, comes on the heels of what happened in Wisconsin over the last year or so. Remember, Wisconsin was the birthplace of the progressive movement. So to have that anti-union legislation passed and then sustained there through a recall vote was also really stunning. So I think we're starting to see the beginning of a trend. When you look at these right-to-work states, especially across the South, they're experiencing much lower unemployment levels. They're experiencing a far greater economic growth pace than northeastern states and Midwest states that are union states.
Indiana became a right-to-work state, I think, either last year or the year before. It's recent. They became a right-to-work state. They've pulled in thousands of new jobs, and Michigan has not.
That's right.
Chief Executive Officer, what do you say about right-to-work states?
I think that it's going to help spur jobs as well. And I think union members, if they want to benefit from what the union has to offer, they need to pay dues. It's pay to play. You can't get the benefits of something and not pay for it. So I think that it's
But a right-to-work state essentially makes membership in a union voluntary.
Correct.
You choose if you want to join it, you join. If you don't, you don't. That's
it. If you want to participate, you pay the benefit. You pay the dues.
Wisconsin Governor Scott Walker, what he did was remove the state as the dues collector for those union dues, which was a brilliant move because so many union members actually don't want to pay those dues because those dues go straight into Democratic coffers. A lot of these union folks are not voting Democrat. And so that was a brilliant move on Scott Walker's part. I don't know if it's the same situation in
Michigan. It's just a right-to-work law, and the governor is likely to sign it. It looks like they're going to be the 24th right-to-work state in these United States.
Good for them.
I agree. Good for them.
Let's go back to the jobs report and focus on the youth vote and young people. Look at this number. 23% of people aged 16 to 19, no job. But still, they come out in droves for President Obama. You want to add anything to that one? You're the CEO. You hire these youngsters?
The CEO, I agree. You know,
But do you see that entitlement mentality
Yes.
in the workforce, the young workforce that's coming in to you?
I see the entitlement mentality. One thing I don't agree with our president is on his position on entitlements. People should use entitlements as a stopgap, as a safety net. And unfortunately, this country is using it as a hammock. It's a birthright to be able to be given something. I'm born in this country, therefore I shouldn't have to work. I should be given things. And it goes back to education. We need to educate the younger people and educate the population. You need to get out there and work for what you have.
You know, I'm beginning to like you. All right. I've got one more topic, the SEC. It slaps Netflix with a violation over a Facebook status. Scott, okay, Netflix posts something on Facebook instead of making a formal declaration. The SEC doesn't like it. All the problems of being a publicly traded company.
Exactly.
You are private.
We are private.
You'd never go public?
I would never go public. You know, as a privately held company, we still have to deal with regulation. And I think reasonable regulation is needed in any financial services business. But to go public and to make a statement on Facebook, you know, the SEC is standing there waiting when you're a public company for you to trip. And they found this as a trip for him to make this statement on Facebook. And Facebook is a public forum.
You don't want that intrusion, do you?
I don't want that intrusion. And you need to, again, I think...
And you don't need to raise the capital.
We don't need to raise the
going
capital.
public would
go
take.
public. We're a private company and well-funded. And again, we purchase life insurance policies from people who don't need it. We're seeing an increase from our business simply because of the potential tax change.
Yeah.
So anytime there's instability in the financial services market, people need to look at their own nest egg.
And the average age of your clients is 82?
The average age is 82. So anyone over the age of 75 should look at their life insurance policy as a potential asset, and financial planners need to pay attention to this.
You are betting on their early death.
We are betting on their early death. We're going to give them a portion of their death.
I can't believe you'd actually say that.
Yes,
you said it.
I've been doing it for 24 years, and I'm very proud of it because we give options to help people retire. In this economy, if you can get cash out of something you never thought you could get cash out of, go for it.
Fade the organ music, ladies and gentlemen. That was Scott Page. The highlight reel is next.